Good morning. Happy Friday, Friday Focus. It's now the 26th of March. Oh my goodness, it's very nearly the end of March. Going to be Easter next weekend. How the heck do we get there? So how have you all been? How's your week been? I hope you've had a really successful week and you've had enough time to yourself doing the things that you want to do. I wanted to talk today about analysing your business's financial position. Now, this is something that I do a lot at this time of year for my clients, because for a lot of them, if they're sole traders, obviously it's their end of tax year anyhow. But for a lot of the limited companies, their end of tax year is also, their end of accounting year is also the 31st of March. And so there is a lot of work to do at this time of year to make sure that we are being as tax efficient as possible, that we are taking everything out of the company that we possibly can without bearing any extra taxes, etc. But also to make sure that we understand what the position is of our businesses. And if this is so important, it's all very well just passing your accounts over to your accountant to do at the end of the year and just say, here you go. And then hopefully they turn up a few months later and you look at the profit and you say, it's not very good. How much tax have I got to pay? And that's what a lot of people do. A lot of people. Hi, whoever's live, lovely to see you. Please click on the StreamYard link and say hi. Let me know you're here. And if there's anything that you need, please let me know. So as I say, we're talking about analysing your financial position today. And this is so crucial. And this is what I really try to drum into my clients' heads at the moment. It's just so important. It's all very well knowing what your net profit is and how much tax you've got to pay. And you might think, oh, fine, I know how to run my business. I'm doing really well. I've got a profit. Have you? Have you actually got a profit? Do you know what your profit is? Do you know what your turnover is? Do you know what your gross profit is? Do you know what any of those ratios are? Do you know what the ratios actually mean? So which ones do you need and which ones don't you need, and why do you need them? Why is it so important to understand your numbers? If you don't understand your numbers, how are you going to set any goals? If you haven't got any goals, then how are you going to know what direction you're going in? Now, it's my end of year at the end of March, and I've just done a very deep dive into my own accounts, which I try to do on a quarterly basis, but usually client work overtakes. But I do try to do it on a quarterly basis if I can. But I've just done it after the weirdest year ever, obviously, like all of us. And it's been a heck of an eye-opener. I mean, a heck of an eye-opener. And I have really delved deep into what those numbers mean and what I can do to use them. So it's all very well knowing what your gross profit is, what your operating profit is, what your revenue per employee is, all of those sorts of things. They're fabulous to know, but what are you going to do with them? How are you going to use those numbers to really power your business forward? And that is what I do. That is what I do for my clients. It's not just a question of understanding the numbers. It's working out what you can do with those numbers. And obviously the first step is understanding those numbers. So how do you analyse your business's financial position? Keeping a really close eye on these financials is essential in planning any business strategy, whatever you're trying to do. Even if you're just trying to tick over, it makes no difference. If you're trying to grow, then you've got to understand them. Every single company, whether you are a tiny little sole trader who's literally just bringing in a tiny bit of income, to the multi-million pound conglomerates, billion-pound conglomerates, everybody should be paying attention to what your current financial state is. It can be of immeasurable value for the future of any business ventures and financial projections that you're going to be doing. Also, you need a benchmark. You need a figure to start off with so that you know where you're growing from, so that it can be measurable once you do get these figures. So proper financial analysis is quite complex, and it requires a certain level of understanding of the relevant information that you need. But if you approach the task with some sort of care and attention by following these steps, then you will manage to get a pretty clear picture of your business and your company's financial position. So number one is you analyze what they call the value chain. The value chain is a process. I'm going to have to read this bit because otherwise I get it absolutely cockeyed, basically. The value chain is a process that identifies activities related to the creation, manufacturing, and distribution of your product or service. This process involves a thorough examination of the internal activities to determine which are the most valuable and which need improvements. Now, I've just done this as a certified professional. It's one of the things that we have to do to work out our value pricing. And it works out not just what your average value is per client, but it works out, it goes so deep. It goes so deep. What services are you offering to which client? Which are the most valuable? Which are not the most valuable, etc., etc. Reviewing these individual steps and their costs will give you a really valuable insight into basic expenses of making your product or your service ready and available for sale. So number 2 is reviewing your financial statements. Now you probably do this up to a point, but how detailed do you go? What do they actually mean? Do you know how to read your balance sheet and your profit and loss? Do you understand what those mean? Do you know what a cash flow statement is and how to read that? Because it's all very well me talking about these things. If you don't know how to read them, then there is absolutely no point in you looking at them, because it's just going to look like gobbledygook, and after a while you're going to get so overwhelmed with it that you're just not going to want to. So if you want some help understanding what those figures actually mean, come and ask me, because I'm here to help, and I'm very happy to help. Alternatively, ask your own accountant, and hopefully that they will explain it to you. So when you review your financial statements, it's really important to understand the really vital components and terms. I'm going to give you some brief explanations on what they actually mean, okay? I would suggest that you go back and listen to this again when you're actually looking at your figures. So your balance sheet. This will probably be your main focal point. This should be your main focal point. This statement represents the assets, i.e. what you own, and the liabilities on your business, i.e. the assets are what you own, the liabilities are what you owe, as well as the equity, which is the shareholder. This is for a limited company. The reserves in the business. You should review that on an annual basis at least. Balance sheet is not done over a whole year or anything like that. It's done a snapshot on a set date. So you set that date. So if you've got 0 or something like that and you look at your balance sheet, you set the date for what that's going to be, usually your last date of your financial year. Under the assets and the liabilities, you will come across both current, i.e. expected to last for less than 12 months, and non-current assets and liabilities, which will last for more than a year. So you've got your current assets, which is your bank accounts and the people that owe you the money, and your stock, if you've got stock. And you've got your fixed assets, which are going to last longer, which are things like your capital items. So your office furniture, your equipment, your motor vehicles, stuff like that. And the liabilities, your current liabilities, is anything that you owe in under that 12 months, and your other liabilities are ones that you owe over 12 months, okay? Dividing your total assets by your total liabilities will give you your current ratio. This is the most important ratio that you can ever use. It is a reliable way to assess your company's ability to fulfill all its ongoing obligations. Taking your liabilities from your assets gives you your book value. Personally, you don't need to know that right now. Step 3 is measuring your risk and your potential profit. Once you get a firm grip on your financial statements, you should really examine how profitable your business is at that moment and compare that to the company's assets and equity. Doing this will help you understand how well your company can deal with the market's risks and challenges. Now, as we all know, in the last year, we've had an awful lot of risks and challenges going on, and none of us have really known, still don't really know, what the heck is going on. So keeping an eye on these figures is absolutely crucial. But the crucial step in this particular step is the comparison. You need to look at the current data and your past data. This is the, excuse me. Sorry, my phone does this all the time. This is the only time that I really suggest that you look at your past data, because I think I don't like looking at past data unless you absolutely have to for comparisons. Step 4 is creating a forecast. To make the most of this analysis, you really need to gather that information and create a financial forecast. Forecast is going to be based on those assumptions about how your business will grow and the market situation in the foreseeable future. I have to read this because I've got to get the wording right. I'm really sorry. When you build your forecasted statement, your cash flow statement, etc., it will be such a valuable tool for detecting areas of your business that could be improved, and also for telling you what's happening, what's going to be coming up soon. So step 5 is analyze, plan, and react. Dealing with challenging task of financial analysis shouldn't be an isolated effort. It really needs to be part of your at least quarterly analysis of your business. It really, really should be. Understanding those financials is just key. It really is. You need to formulate some sort of strategy, and you need to try and do it literally, as I say, on a quarterly basis. Cut down on most costs. Prepare a precise plan of action and be ready to push your business into the right direction, wherever it is that you're wanting to go. This is where your SWOT analysis comes in. This is something that I now do with my clients. Do you do SWOT analysis in your business? Don't know if you saw the post on the Facebook group this week. Do you do a SWOT analysis on your business, and how often do you do it if you do it? I've had quite a lot of people commenting saying, yes, did one with my business plan. When was that? 5 years ago. Haven't done it since? No. How often should I be doing it? Should be doing it once a quarter. If you can't do it once a quarter, do it once every 6 months. If you can't do it once every 6 months, at least do it once a year, please. It's so important to understand what your strengths are, what your weaknesses are, what your opportunities are, working out if you can make those opportunities into strengths. It's fascinating, and it's actually quite fun as well. So once you've worked out what you need to analyze and you've worked out a plan, how can you get that plan into work and into operation? If you don't know how to do a SWOT analysis, come and talk to me. I am now offering, which seems to be very, very popular, a power hour. We go through a SWOT analysis. I go through your figures to explain to you what those numbers mean. And then we set up a plan so that you can actually work out exactly what it is that you want to do for your business. So come and talk to me. Understand your numbers, please, please, please. I'm trying to get this out to as many people as possible. Please understand your numbers. The more you understand, the more you're likely to be able to move forward. And the more you can move forward, the world is your oyster, and the more profit you can make. Have a fabulous weekend and a lovely week next week. Even though it is Good Friday next Friday, I will actually be here. So I may not be here in person. I haven't quite decided whether I'm going to record it or not. It depends. But I will be here anyhow. So come and join me. And thank you so much for being here today. Have a great weekend. Bye, everybody.